Hello, home buyers. We're going to talk today about the FHA 203H disaster loan. This is not something that many lenders come across too often. And this is not a program that too many home buyers or homeowners know about. But oftentimes we have the unfortunate situation where there's a disaster in some area of the United States. And when the disaster happens, you have homes that are severely damaged or in some instances destroyed. Now, this unique FHA program, the 203H, is one that helps you to either rebuild your home if you own a home that was in a disaster, or to purchase a home if it was affected in one of these disaster areas. Now, the first thing that's important, and I'm going to read this from the website here, is you have to be a victim of a presidentially declared major disaster area, and that acronym is PDMDA, for the purchase or reconstruction of a single family property. Single family, not multifamily. So the home needs to reside in that disaster area that's not something that you believe is a disaster area, but again, one that's presidentially declared a disaster area. So you must qualify for this mortgage the same way you would any other FHA loan. You need to provide your tax returns, W-2s, bank statements, and you must be within the debt-to-income ratio guidelines set by the FHA or by HUD. Now, you can't delay, because once a disaster area has been declared, you have 1 year to establish an FHA case number for the property. So you can't drag your feet, especially if you're trying to rehab a home that you already own and you want to refinance it. You need to act quickly, assess the damage, get an estimate as to what it's going to cost, and then do this refinance under this program and apply within 1 year from the point it was declared a disaster area. Now, regarding the down payment, there may be an exception made. It's maybe possible that you can do a 100% loan-to-value ratio on this program, even though FHA requires 3.5% down. That's something you need to check with your lender on to verify that that will apply for you. Another thing that you need to know is, and this is a benefit that's unique to this particular program, if you have late mortgage payments, those will not prohibit you from getting an approval on the new mortgage, especially if the disaster in question has resulted in the late mortgage payments or missed mortgage payments. So if you are more than inconvenienced, if you suffered a loss because of the disaster and have not been able to make your payments, that will not be held against you when you apply for this mortgage. Now, let's say your income documentation records were destroyed in the disaster. Maybe there were wildfires that took out a huge section of California, for example, because that's where they happen a lot. Or you had a home that was wiped out by a hurricane in the southeast, and all of your tax returns and W-2s are lost. You know, the guidelines will allow some flexibility and a workaround in some fashions for you to be able to help prove that you make the money that you make and that you have for the last couple of years. Maybe get some, transcripts from someplace, but there will be accommodations made for you if you're unable to provide the documentation that was normally required because of this disaster that may have destroyed those documents. So if you had the unfortunate situation where your home was negatively impacted by one of these disasters, or if you want to purchase a home within one of these disaster areas, and if that's the case, you must currently reside in that area as well, then reach out to us and we'll help you to qualify for one of these mortgages and maybe answer some of your questions. So just follow the link down below to FHAlenders.com. If you have any questions, ask them in the comments as well. We'll answer them there. I hope you have a great day, and we'd love to help you with your mortgage.